So good. Well, we're going to get started now. My name is Jim Sheils. I'm a partner at Southern Impression Homes. And I'm going to be sharing with you tonight our master class, all about who we are, what we do, and why we do it, sharing a bit of my history and how I came about into this venture and have been able to work with thousands of investors now. Just a disclaimer, I'm not an attorney, I'm not a lawyer, so I'm not giving legal or accounting advice. This is purely for information. Here I was just a few weeks ago at a masterminds with Robert Kiyosaki. This was really interesting. Like a lot of people, I don't know if you've ever heard of Rich Dad, Poor Dad. It's one of the first books I read. In fact, my first mentor gave me Rich Dad, Poor Dad and 7 Habits of Highly Effective People. And that really helped start my entrepreneurial journey. It was these two books that got me into the mindset of what I wanted to do and actually got me into real estate. And from those two, I decided to take my first real estate course. This is back in 1998 for $5,000. And most of my family and friends said I was crazy, but the person had been there, done that. And I wanted to learn from him because I had figured out that I could have passive income and active freedom. And what that meant to me as this young, impressionable guy in his early 20s was if I could get my real estate into place, then I could do the important things, get to the good stuff, have freedoms that I didn't have growing up as a kid in my own family. And I started with that first deal. That first deal was a 3-family home for $152,500. I remember hyperventilating in my rental that I was renting at the time when the realtor said, "Congratulations, you got the deal." And this was my leveraging point. This first deal got me on my way, and I sold it about 5 years later for $570,000 to put more money into my real estate investment business that I was rapidly growing at that time. And today's value is about 865. So you can see the power right here of why I like real estate and why I like it for the long term. Now, here I am. You look at this. This is my first rehab at that house. I got more paint on me than I did on the house. My contractor friend said, "Please don't ever help again." So I learned that I could oversee rehabs, but I wasn't that great at them. And it's really what got me going. And it was by doing that first property, like I said, I learned about the importance of time in the market, not necessarily timing the market. Everyone always got, wrapped up on timing the market, timing the market. But what I found for most of my mentors is when they planted seeds and spent time in the market is when better things started to happen. So that's the key to wealth that I've learned over the last 26 years being an active real estate investor is long-term buy and hold. Not only is one of the most proven ways, but it's how I was able to create multi-millions for myself and then also do so for investors. So again, going back to this, my parents did not have money, but what was able to help them retire besides myself was this one property right here that they bought in the early 70s and then sold in the early 2000s for a large profit. Going from 49,000 to selling for nearly 600,000. It was a game changer in their financial career. And going back even further, this is a little home in Ireland that my great-grandfather built. My second cousin still owns it. And it's funny, I think to build it was probably about $800. And now it's been in the family for 142 years, worth several hundred thousands of dollars. And again, shows the power of long-term buy and hold. And my thought was seeing these two examples growing up as a kid, what if I had a couple of these properties or even more for a strategy? And that's really what helped me start my first business out in California. Here I am cutting the ribbon with the mayor of Bakersfield, California. Very exciting, fixing up old houses, renting them or selling them with investors. But I found that model, although it made me a lot of money and I picked it up from California and brought it here to Florida, that old fixer-upper model of buying old houses, fixing them up, renting them or selling them, it did make me a good amount of money, but it bankrupted my time. And why a lot of you are probably getting into this is to buy back your time, not to take on a second or third job. And so I had to really transform if I wanted the time back, especially with my family, my hobbies, and going into new construction, dropping my old rehab shoes and going into new construction about a decade ago changed everything. Not only my time being bought back, but also the acceleration of my wealth. And I spend a lot of time with my family now. I have a beautiful wife, 5 children. We spend months at a time, sometimes in Costa Rica, long RV adventures. It's one of the things I've worked hard for and been able to do only because of my real estate investments. And it's something I want to continue to do for as long as I have, and keep my hobbies too. A lot of you probably have given up hobbies because you haven't had time. My real estate has allowed me to continue to surf, continue to travel. And I think that's the beauty of actually doing the long-term buy and hold. Also, by having real estate in place, I was able to fund and also physically be able to have the recovery time to donate a kidney to my father. Probably one of the best things that ever came out of my real estate endeavors was this one moment. And also our book. If you guys have not read our book, it did become a USA Today bestseller. Just email Jaden at 18summers.com. Just email her there, say, I want a copy of the book. If you're on here tonight, we will mail you out a copy. This is, again, whether you invest with us or not, of course, we want you to. You're going to learn principles that took me 25 years, and several of our investors and my business partner, the hard knocks that we had to go through, and things that I think you can avoid by reading this book. Lots of great case studies too of successful clients who are now feeling that active freedom from their passive income. Also, we did write a book that's a best-selling book for family life. That went to #1 on Wall Street Journal. It wasn't my authoring that got this done. It was my real estate connections and also my real estate business that funded this project. Now, active freedom looks different for everyone, but asking some of our clients, and we'll talk about some of those tonight, is, what is active freedom for you? And they talked about spending more times with loved ones, upgrading their health, pursuing old passions that they gave up, traveling, quitting their jobs. That's a big one I know that people have been able to do. Buying a plane. One of our investors we'll talk about tonight bought a plane through one of his rental incomes, and retiring their parents, helping family. That's something, I've seen really be a big cause for me to pursue my wealth, but also others. Now, here's Chris and Carter Funk. So they actually founded Southern Impression Homes. I had worked with them for years on different deals. They managed a large amount of property portfolio that I had for me. And about 10 years ago, they came and said, hey, Jim, why don't we start building new houses instead of rehabbing old ones? And of course, I said, well, that's a terrible idea. I'm a rehabber, how dare you? But it took little convincing. And after doing those first properties, I could see this was a way to not only provide better for ourselves, but for our clients, and also be able to expand and buy back our time. And our team now is, not just me, not just Chris, not just Allison and Jaden. We have a team of nearly 140 and growing. And so it is a systemized approach to help you do all the things that I had to do on my own 25 years ago with better systems, better fundamentals, and better results. And that's what we do. We're always out teaching and sharing our investor method of build to rent with people. Again, we call it the 2.0 of turnkey investing because we only work with new construction. And I do believe that gives us and our clients an unfair advantage for a successful venture and results. Now, if you look very similarly, our business has grown a lot. There's our old office on the left. I wouldn't say it was in the best neighborhood, got the job done. And now here's our new office where we've really been able to grow and expand for lots of reasons that I'll discuss tonight. And it's great to see that also benefiting our clients. Our business was built, by investors for investors. That is probably one of the key things. You hear about people trying to help other new investors or seasoned investors get into real estate investments. Do they actually own property? Have they been in the trenches? Most people know my story, owning hundreds of properties myself. I know the good, the bad, and the ugly, and what works and what doesn't. And so does my partner, and so does our property counselor staff that some of you have probably worked with. They've been in the trenches a long time investing themselves, and it makes a huge difference. And so our company now works with wealthy and ultra wealthy people to help them build successful rental portfolios for long-term wealth. And people say, what is wealthy or ultra wealthy? Well, I consider anyone who has $100,000 to invest a wealthy person. And that's about the starting point. You can get in about 80,000 to start. But I always say if someone has $100,000 in cash reserves, they're usually in a great position to start building a real estate portfolio. So we only do affordable new construction in affordable growth markets. And I'll explain to you what makes something a growth market. And we work with low interest rate mortgage financing to help ensure cash flow. Now, a lot of you are saying, hold on, Jim, how do you get low interest mortgages today? I mean, that's something of a few years ago. Well, we actually do something of our own in-house financing, which I'll talk about tonight, which is an absolute game changer where most people are having to wait for interest rates to drop. We're getting them prematurely dropped to what you were probably locking in at in 2021. And we'll talk about that tonight. And able to get this new construction and growth markets with a great loan in place and ensure cash flow, you got to have property management in place. And that's something that we started before we even started building 10 years ago. So our system, and any system I encourage you to work with, especially if you're going to go into build to rent or new construction turnkey systems, they got to build the property right for you. They got to finance it right for you. A lot of people can't provide that, and they got to manage it right. And these are the three pieces of the puzzle that have made me the majority of my wealth. And it's made several of our clients millionaires by following this simple strategy, letting us do our job of building it right, financing it right, and managing it right. And if we manage it right, again, buying back our clients' time, you should be able to own a rental portfolio with putting in less than 1 to 2 hours a month on that actual portfolio. That is the goal of our system. Again, property management is key. Our property counselors can talk to you about that wherever you go, guys. I encourage you, if you're going to buy a property, have management lined up. Managing from afar or trying to do your first arm at property management from several states away can be a really tough thing. Or even if it's in your backyard, I don't like managing my own property. I've always been one to sub out the management to someone else. Now, our sweet spot, we have a very simple business model. We like residential real estate, single family, duplex, and quad. So residential real estate is anything 4 units or smaller. And we see these in high demand. You know, the single family home is the bedrock really of the US economy, especially when it's right at the affordable level. Duplexes and quads are something that helped me accelerate my wealth over the years. And they're rarely new construction. In fact, we're one of the only builders that actually builds duplexes and quads. And those two, in addition with combining with single family homes, have created a lot of wealth for our clients. Now, we are building all over Florida. But as you look at this map, you don't see us in Orlando. You don't see us in Tampa. You don't see us in Miami. And a lot of you, again, I grew up in the Northeast. I'm like, geez, isn't that all there is in Florida? No, we purposely didn't build in those areas. The land was too expensive and the numbers didn't work. Remember, this is not about emotion. This is about what's going to help accelerate your wealth, put money in your pocket, and grow. And so we saw those markets as too expensive, that you'd be losing money every month in. So we went to these second tier markets where they were experiencing the economic factors that we look for. And it's these economic factors: economic growth, population growth, affordability. If some of you guys have been following me this year, this is the A word is the main word: workforce housing, affordability. With the economy being questionable right now, it's the affordable properties that are in high demand and renting really well, and also producing returns. Desirability. Do people want to live in the area? Why would they want to live there? And from a landlord perspective, remember, I came from California and came here. Is it landlord friendly? That's what was one of the things we gauge to see if it's actually desirable. Is not only the amenities, the enjoyment of living in the area, but the landlord laws, and helping supply and demand. We want to go where there is an abundance of growth happening and there's an undersupply of houses. So right now, where Allison actually lives in the greater Ocala area, that's still one of the fastest growing areas in the nation, and there's a housing shortage. So we're putting a lot of single family and duplexes on the ground to help with that. But with these 5 factors in place, and it's very hard to find all 5, but in our second tier markets in Florida, we're seeing it, we're able to better predict growth and success. Now, right now, as a company, we have just under $1 billion under asset management. That produces about $56 million in annual recurring revenue for our clients. It's produced almost $200 million in equity just in the last few years for our clients. We currently work with over 1,000 investors. We've built over 9,000 units, house over 10,000 residents. We have over 120 employees. This is actually an older slide. It's actually over 140 employees now, and that's continuing to grow our team for better success. And to work with us, like I said, it's a minimum investment of about $80,000. Now, if you're not there yet, don't get discouraged. Again, I was that guy who had saved $25,000 and had to figure out a cheaper way to get into it. It just wouldn't be, I wouldn't be, of my start out stage, a client for our own company. So there are other ways to get going, and you can look up some of the resources that we have on our website. But in order for us to successfully start building a portfolio for one of our clients, you need about an $80,000 cash minimum so that we can start to build it properly for you. We also own over 5,000 lots in Florida. We bought this because we felt that Florida is still in a really healthy growth pattern that's going to continue for the next decade. And so we plan to build out all these lots using that simple recipe of desirable single-family duplexes and quads. Now, what is the success rate? If you had invested with our company 5 years ago, $250,000. Let's look at the results. Now, what if you had invested $250,000 into the S&P 500? Well, 5 years ago and to now, you would have about a 10.5% return. That's really a good return. Let's say you had invested in a good real estate fund. You know, there's different ones out there. Some are good, some are bad. But let's say you had gotten into a good one. A good one would have scored about a 13.5% return over the last 5 years. Now, let's look at our results. If you had put $250,000 into our build-to-rent turnkey program in Jacksonville, Florida 5 years ago, your annual average return would have been just over 69%. That is not a typo. And that is the power of leveraging into buy and hold real estate and looking long-term with it. And it makes sense. Now, if you look at that blue mark in the middle, funds, these larger institutions come to us, and I invest with some of them, but they come to us to have us give them money so that they can go over to that green bar and own the property themselves and pay us a return. And if they're able to pay us a return of 13.5, well, that green marker shows you why they are, because they get into real estate smart, they look long-term, and they pay out really well because they're making even more money. So although I invest in all three of these, S&P 500, the real estate funds or REITs, my direct property ownership has made me millions more than any of these other investments. And that's why I encourage, and that's why we built a business around it. So wealth, independence, and security are not just the products of work. Remember, a paycheck can stop suddenly, and you can't be trading hours for dollars all the time. And you need to be able to invest things forward, because you can't keep that working 24/7 the way a solid long-term buy and hold can. So there's three types of investors in real estate. And this is really important to remember. I think the first one, where I started out because I had no money, was the fix and flip. Buy an old house, fix it up, and resell it. That can be a great way to get started if you're having time, you want to get into the trenches, and that's great for some people. Other people are saying, well, hey, I already have a great profession, a good paying career. I don't want to fix and flip houses. I'm looking for something more long-term. So if you're looking for something more long-term, that brings you up to more the enhanced level. That's the do-it-yourself landlord. Normally, that means you're finding a realtor in your own area. You're starting to scope out different properties, doing research on them. You find something, you got to inspect it yourself, see if there's repairs. If there is, you got to find the right people to fix it. You have to find the lender to do it. Who's going to insure it? How are you going to manage it? Maybe it's a manager, maybe it's me. Again, this is how I started right after my fix and flip model, and it can work really well. It's very costly on time, though, and you're bound to make some mistakes being the new guy. Again, I was the new guy in this, and although it helped start to create my wealth, it can be very taxing on time. And again, we always try to be extra cautious with the time that I'm now using and my investors are using to grow their wealth, which brings us to the engaged level. Now, this engaged level is really what I call the turnkey level. This is where we work with several clients now who are, busy in their career, their practice, their business, and they want to be more exposed in real estate and have some in their portfolio for long-term wealth and retirement, generational wealth, but they are not necessarily in the right area or able to take the time to do it. And that's where we step in. We call it turnkey investing, but call it turnkey 2.0. Why? Because this turnkey model of finding a property that's already been renovated and fixed up and rented out and taking it at that point, those are great. And I used to do a lot of those, but the older properties have their issues and they come up a lot more. And that's why I switched to new construction. And that's all we do now is new construction. So that's 2.0. It's at this little top part of the triangle here where you can save your most amount of time, put boots on the ground in multiple areas with a lot less risk, and get great results. And that's the one that we try to stick in with our clients. So without your money working for you guys, remember, you'll never stop working for money. This became abundantly clear with my first mentor saying, you need to own income producing assets and look long-term. And that's never changed for me. And asset owners always finish ahead. If you're attracting good income to build wealth, you have to have that asset base in motion. You can focus on accumulation while still extracting wealth when needed, refine off your properties, taking cash flow. I love my properties, and it's allowed me to do that in so many instances. And it's allowed Tom to do this. Again, Tom is my friend, and I'll show you that in a minute, who bought the plane. He's former Air Force, was running a very successful mortgage company, And when he came to me, he wanted to retire within a few years because he wanted to fly his plane more, and his beautiful wife here was going through a kidney donation process. Now, as I shared before, I remember this really well because I said, holy cow, my dad and I did that, and we had some really great chats and could see eye to eye. And Tom really went all in and bought about 8 properties with us, systematically 3, and then another 3, and then another 2. And from those properties, he's created over $1 million in equity growth in 4 years, and he's almost to $12,000 a month in cash flow. And he said that he now his private plane financed by his rental properties. The last 2 properties he bought says pay for his plane. This is a text I got from Tom. We were talking about family. He was asking how my young daughter was doing. And on this July 1st of a few years ago, he said, I retired from Fairway Mortgage yesterday. You played a big part in allowing that to happen. Thank you. I love getting messages like this. I know Allison loves getting messages like this, and she's had tons of them, being in this for 10 years, working with hundreds of clients. And this is what we aim for. This is what we want to see for our clients. And it all started again with this one simple duplex that he built into 4 more and then to 2 more, like I said. So 5 ways to make money in real estate, guys. There's 5 ways. And this is something that was taught to me many years ago. There's appreciation, leverage, meaning you don't have to pay cash for it. You can get a mortgage, which is great for leverage, debt pay down, tax benefits, which is really important for some of you out there. Some of you need the tax benefits of real estate to help shelter your wealth. You might have sold a business. You might have a very successful practice or a high-paying job. The tax benefits can be very helpful. And then there's cash flow. All 5 of these are very important for building and creating wealth. One thing I will say to you, though, it's been my observation that number 5, cash flow, is what's talked about the most. And cash flow is great. I want to make sure that's abundantly clear. It's great. However, when I've had to look back on my books for the last 25 years, doing hundreds of properties, my multi-millions was made from number 1, not from number 5. And yes, number 5 did help, but it was mainly came from planting the right seeds in the right properties and looking long-term with them. And so I always tell people, know which one of these 5 is going to make you the most money and what has historically worked. And it's absolutely number 1. So although we never depend on appreciation, we do our best to get in its way. So these are 5 common pitfalls that I have found with real estate investing. I want to go through these real quick. And again, you can take these into any of your real estate endeavors, and I think they'll help. So the first one is short-term thinking. I can't express this enough. Look back again, what my parents, who never had a lot of money, struggled with money, I had to help retire them. That one thing of holding that one property did significantly help their life. I mean, my grandfather building that house for $800, and now 142 years later, my second cousin still owns it. I've seen for myself holding properties for over 20 years, the growth that's occurred. So I'm looking long-term. A lot of people that get into real estate are short-term. Where is this going to be in 90 days, 6 months, a year? I needed to make more money, make more money. There's no patience, and that's very short-term thinking. So I'd encourage you to look more at the long-term thinking. It's the people that look very short-term, they don't let the seeds take hold. They don't allow them to be watered. They don't allow them to nurture and grow. And that's where you can really, sacrifice your wealth. Do it yourself. This is the way that most real estate investors get burned. They don't have a lot of time. They don't have a lot of experience. They don't have the connections. And so do it yourself, although sometimes doing it yourself can actually save you money and you get in cheaper, obviously, it can do just the opposite. In fact, most people I know that have only tried one investment property or 2, did it themselves, didn't really have the understanding to know how to do it, and it really hurt them financially, and they never went back again. So I tell people, if you can leverage off of good support systems and not do it yourself, look for proven track records and systems, that can be a very easy way to, again, protect your time and grow your wealth. Chasing cheap. This is something that we've really become known for, and even have gotten a little, I'd say, controversial on some of the bigger podcasts. A lot of the offerings out there, especially in turnkey real estate investing, are going to encourage you to buy the cheapest properties available and say, well, the down payment's less. You can only buy one of these better properties, but you could buy 3 of these cheaper properties. So you have to be better off. This is a recipe for disaster almost every time. And I can raise my hand and tell you why. And if you've read my book, you know that I was that guy chasing cheap, which seemed sensible in the beginning, but it was getting me into some really questionable properties that had a lot more maintenance and repair than I thought, a lot more turnover, a lot of problems. And my biggest lesson, when people say, what's the biggest lesson? What would you say to that young guy in his early 20s? I would tell him, buy less of better quality. That's my whole lesson. It sounds really cool to say I've done over 1,000 properties. I own, over hundreds of properties. It is the fact that I did deals that I shouldn't have done that I think I can protect you on, saying, don't chase cheap. If you can own less of better quality and look long term, you're going to be more relaxed. You're going to be less overwhelmed. You're going to be more successful. And that's what this is all about. So I would highly caution you for anyone telling you to chase cheap, because a lot of the times the numbers don't play out on the pro forma the way that they might be stated. Misdirected charity. This is something really important, guys. Do not confuse your rentals with charity. I always include this lesson because, and this is why I like to have a manager in between me. When I bought those first 5 rental properties in Bakersfield, California, 25, 26 years ago now, well, what happened was I was taking more excuses than I was rent payments. And what I learned is my mortgage payment is due the end of every month, no matter what happens. And although there were some valid issues for tenants, most of the time there was not. And what I learned was, too, I love to give to charities. I'm involved with a lot of different organizations, that if I gave charity in my rentals, I can't give charity anywhere else. It all went to them. And sometimes the people weren't even appreciative. And it was not a great situation. So what I've learned is I have a very clear separation. I will give to charity and I will have rental properties, but I don't like to combine the two. It just does not end well. Wrong partners. This isn't anything. This could be with friends, marriage, business, but definitely in real estate and real estate investing, it is a team sport. If you team up the wrong partners that don't have a track record, don't actually know what they're doing, haven't been involved in real estate for long, this is something you have to watch for. And I highly encourage you, you talk to whoever you're going to talk to, whether it's our team or someone else. Ask the questions. Are they good partners? Do they have experience? What are the fundamentals that they follow? And a lot of those questions can be answered for you, whether they are good or not possibly a good partner. But teaming up with the wrong partner is one of the ways that you can absolutely decelerate or cancel your wealth. And that's something you want to avoid. So guys, again, our plan for 2025, affordable new construction, affordable growth markets, that population growth, economic growth, good affordability, desirability, healthy supply and demand occurring, low interest mortgage financing to help ensure cash flow. And I'm going to get to that in a minute. How are we getting low interest financing in these high rates? So remember, savvy investors use proven systems, strategies, and guidance to make money in real estate by producing repeatable results. I do the same type of real estate deals over and over and over and over. I remember my real estate mentor said, remember, doing real estate deals should be boring. If you want excitement, go jump out of an airplane, go surfing, do something like that, but you want it to become boring and repeatable and predictable. And that's what we do with our real estate strategy of this build to rent new construction turnkey. Again, remember, only 3 pieces to this game for what we do. We have to build it right, we have to finance it right, and we have to manage it right. So building right is something I know we have a lot of experience in, again, with building, nearly 10,000 units. We've really fine-tuned over the last 10 years. But one that people get confused about is financing right. And what we do is something called in-house financing, where we actually work with a bank. We have a very healthy financial statement and balance sheet. So we're able to buy large tranches of money and several $1 million at a time and pass the savings over to our investors. And that's how we're locking in at rates as low as 3.75 for our investors. Also, part of financing, guys, is insurance. Now, property insurance, there's lots of rumors out there. I've heard them as I travel the US and up in Canada. I heard you can't get insurance in Florida. Well, we'll go over some case studies to show that's not true. In fact, new construction is one of the easiest properties to be able to get financing on for very low amounts. And I'll show you that exact. So let's look at that for a minute. So right here is some of our in-house financing. This top number 1 is what people are locking in at. They're getting in at 3.75. That's for 10 years fixed, 30-year AM. Or if you want the 30-year fixed, you can get in at 4.25. A lot of you are saying, holy moly, when I went to my last bank, it was about 3% higher than that. And that's right. We are buying these mortgages down for you so that you can get into them and it helps them cash flow right away. A lot of builders can't do that. You have to have a certain balance sheet and financial statement strength to be able to be offered this program. Luckily, we're in that position to be able to do it. And again, the houses that we're getting, they wouldn't mean much unless we didn't have these 5 things. I want you guys to remember this. Always ask, is this area having economic growth, population growth? Is it affordable? Is it desirable? What's the healthy supply and demand balance there? Are there more people than there are houses? This is what you want to look for. So getting back to population growth, again, the first one, we build in Florida quite actively. We have not gone into Alabama. I love the Southeast. I like Alabama. But what I was taught years ago is population helps cover your tracks. That's what someone taught me. And it really does, especially when it comes to real estate usage and growth. And if you look at this chart of the growth patterns in Florida, since the early 1900s to now, it's that hockey stick approach. Nothing against Alabama, guys, but I haven't seen that growth there. And when I see that kind of flatter line when it comes to population growth, I know that my properties that I could be holding there could be in kind of a grave danger of not having the people there to occupy them and forcing up appreciation and values. That's very important to me to see those hockey sticks wherever we're going to build. And another thing with affordability, I want to get back to affordability for a minute. This was a really interesting quote. The housing shortage in Florida is still happening. You hear, I hear inventory levels are going up. They are on a lot of more expensive condos or higher end properties. But the affordable properties, that ones of workforce housing, there's an issue there because a lot of the builders are not wanting to build them. We're a low margin builder. A lot of the big national builders are high margin builders. And that's how their business is set up. But we want to help with this issue here. I mean, the Sunshine State has only 25 affordable rental homes for every 100 low-income renters looking for it. I mean, that is an incredible opportunity to stay within this niche where we still see value strong, rent strong, and even growing. We've seen rental growth, again, in 2 of our main markets, Palm Coast and the greater Ocala area, in these times of when people are saying things are unknown and sideways. But it's because we stick to this workforce housing, this affordable realm, that there's just an undersupply of. And again, for the US in general, although I don't like to look at US real estate data, this one is pretty powerful. When you hear all the news out there, just know with all the growth that we've had, new additions, new families, the US is short 4.5 million homes for the existing people here. Just today, that's going to take quite a while to build back up, especially in key areas like where we work in Florida. Now, supply and demand, you'll see that in January 2023, and these are Federal Reserve charts from here, some of the Federal Reserve, that January 2023, if you look at that high peak, that's when the permit issuing peaked back in January 2023. So we are moving quickly past that, 2.5 years past it now. And if you look at what's happened since then, the permit issuing has plummeted. It's gone down. And we saw a lot of this inventory come on the market in January of 2024. So a year after the permits, the properties were built. We called it COVID inventory. And there was more property that came on the market, which slowed down absorption, which people got concerned about. And we're seeing that quote unquote COVID inventory that came on in the beginning of last year being worked through. And what is being statistically predicted is that by the end of this year, so again, holy cow, we're midway through the year, in another 4 to 5 months, that inventory is going to dry up, and it's like that game of musical chairs. It takes at least 2 years for the permit issuing to start back up and to go through its next cycle, which means very, very predictably, and it'll be something you can hold me to, we will be at another inventory shortage in key areas like the markets we focus on in Florida by the end of this year. Something we're very excited about because we're continuing to build that workforce housing when a lot of other builders have sat on the sidelines because of the higher interest rates. And again, when people talk about inventory levels, I know there's been a lot of questions out there. I heard there's inventory levels, they've shot through the roof. We have to be sure that we're looking at the full stats. If you're comparing it to mid 2020, when the market only had 3 weeks of inventory and the normal time is about 7 to 8 months of inventory, that's a big difference. But we want to look at the number of listings. I thought this was interesting. At the end of 2019, before the pandemic, a normal market, you can see the listings in Northeast Florida were just over 20,000. Okay. And then at the end of this past year, 2024, still about mid-20s. So, and that's after a lot of population growth. So really the numbers right now of our inventory levels are about the same they were in 2019. And that was a very normalized market. So we're actually liking to see this normalizing of the market, and we're still seeing the housing demand higher than it was in 2019. So I want you guys to remember this. This is really important because I wish it had been taught to me. I didn't learn this till years in, that it's the time in the market that's going to create my success, not timing the market. I find that people that are always trying to time the market never get in. The people who plant the right seeds and have time in the market are the ones that usually win. And that's something you really want to take to heart. Prosperity in the Age of Decline. This is a great book. I've been a member of ITR Economics for years. I love their unbiased, very unemotional write-ups of what they do for the real estate industry, all industries. You know, when you look at this, just in the middle of this time last year, February, one of their last updates, you can see housing, because of that interest rate, was just at the bottom of an upturn. And we came through it pretty well, but they're predicting the next 4 to 5 years to be a really good time for the type of property that we do. So again, I know I'm like the broken record, but I want you guys to get this. When you're looking for your real estate investments, for your long-term buy and holds, I believe some of the best ways to create those building blocks is to look for affordable new construction in affordable growth markets where there's growth happening. We went over the 5 factors, with low interest mortgage financing. If someone tells you it's impossible to get a 3.75% mortgage or a 4.25% mortgage today, now you know it's not, especially if the builder has what's called a builder forward commitment loan program. And that helps ensure your cash flow today. You don't have to wait on the sidelines. This is what we provide for our clients. This is one of the ways that I created, multi-million-dollar profits, was by going into multiple properties in this exact scenario. So let's look at one real quick. This is Ocala. This was our top. The Ocala region has been our #1 pick for where we build due to those 5 fundamentals. And this is your 3-bedroom, 2-bath model, 1,357 square feet, $269,000. A lot of you may be from California going, holy moly, you can't get a lot of land this size for $269,000. But we're building new construction with long-term warranties in place for that. And people are really, really impressed with that. Again, the median value for that area is about $300,000, so we're still below the median, and these homes are very desirable for tenants. I like you to look too at that insurance number. If you look at that insurance number, you got mortgage, your taxes, and your insurance. To fully insure this property is $62 a month. So I know a lot of people again say, is it impossible to get insurance in Florida? I've heard it's so expensive. On certain properties, yes. On new construction properties in the right strategic areas, absolutely not. And something that we do offer for our people is free property management for the first 2 years. So we waive that 8% fee for the first 2 years to be able to help ensure your cash flow. And there is cash flow right off the bat. Again, that's something a lot of people thought we couldn't do doing new construction, but there is cash flow right off the bat on this single family. One of the things I think best is, if you have not done a call with one of our property counselors, I would highly encourage you to do that. There's no obligation, and you will learn a ton on that first call of how to calculate the numbers. I know the numbers sometimes can be a little intimidating, but we want to look at, again, all 5 factors working together with some very conservative growth patterns. Where will you be? And on this property, someone like Allison, again, could walk you through that. We see a 5-year hold profit over $135,000. And you're saying, how is that possible? Set a call with your property counselor. They will walk you step by step through so that you understand it, you see it, and you can even see case studies around it of why we've been able to do this for so many clients, and we like to do it for you. So this is a duplex. Again, one of my favorite models. I just love the duplex. I love all our properties, single family, duplex, and quad. But the duplex really does offer an interesting situation. You're able to build one of these normally in a single family home neighborhood, which gives a tenant who couldn't afford the single family home to rent a half a home to rent with their own yard instead of an apartment building where they wouldn't want to be compared to this. And now you get 2 tenants under one roof. It ups the cash flow. And down the road, you're able to sell these to another investor, or you're able to sell them to a house hacker. And we've seen this really come alive in the last 2 years, where again, house hacking means you live in one side, you rent the other side. It's become very popular. There's now VA loans and FHA loans that allow this at very low down or no down. And so we know these have long-term value in great areas. And if you look again, the insurance, $92 a month for 2 units under one roof, that's fully insured, and a cash flow of $700,000 on a new construction home. And again, I have to tell you guys, I don't miss my old rehab days much at all, because I didn't like the surprises. With new construction, you don't see a lot of that surprise. In fact, we would call it the 3-year curse with our fixer-upper properties. After 3 years, we knew that things would just go higher, estimate more. 5, 7, 8, 9 years in, we haven't seen that with our new construction model, because we're able to plan right from the beginning and execute, not have surprises with durability, aesthetics, building in better areas. And these duplexes have been fantastic. Also, one of the things we've seen too with our new construction model that I always share, when I used to fix up old houses and rent them, my average tenant would stay about 13 months. On our new construction product, like what I've shown you, average is now 3 years. That says something, and that's a reason why we only do new construction. So again, with this, you want to learn the numbers exactly. How do you come up with a 5-year hold of over 210,000? This is exactly how. Our most successful investors, guys, you say, well, how many of these I have to do? Jim, you said you've done hundreds of properties. I have. And I needed to tell you that there's a lot I shouldn't have done. We found with a lot of our people, what they're trying to do, what they're trying to accomplish, the residual income, the positioning, our most successful investors own 3 to 8 properties. That's it. A combination of these 3, and it produces for them. It can produce a 7-figure profit. And Allison has helped many of her clients do that, along with Jen and our other property counselors, PAWS. So if you want to learn how to do that, that's what we're here for. But don't think, my goodness, I have to own as much as I did. There's a lot of properties I should have never owned. And our job is to guide you to get the best one, own less of better quality, and it produce the results that you're looking for. Adam Hamilton did this. Again, Adam was a very hands-on investor in Utah, always did it himself. And then he came out, met with me and actually my wife through some chance circumstances of friends. And Adam saw the worth going from Salt Lake City to Jacksonville and really dug in. Adam went into several properties, started with 5 properties and then bought another 7 properties, and then went into other investments I wasn't even involved with here in Northeast Florida, and even moved here part-time because he liked it so much. Adam's monthly cash flow from his property investments coming and starting to work with us is now over $20,000 a month. Not only that, he's up about $3 million in equity in the last 4 years. So this is one of the bigger clients that we've worked with, but also the ability of someone who is seasoned, couldn't find it in their own backyard, and has gotten results. So remember, guys, asset owners win, job security loses. Not that you shouldn't work hard, but you got to start putting aside for assets, because everyone knows 2 years goes by fast, 5 years goes by fast. Holy moly, 10 years goes by fast the older we get. And if you have those assets growing alongside you, you can be in a position to have that passive income and active freedom that we want for you. Here's one of the white coat investors. I'm sure we have a few of you guys on today. I love this one. He worked with Austin on our team. He was so happy with the first one. Once it closed out, he already bought his second one. And that's kind of the proof of concept that we want. And again, this is not just me. It's not just Allison. We have the whole team of our closing departments, our portfolio managers. You're going to be working with a team where you're always with someone. You're a part of the process, but never alone. And we love our white coat investors. We love building portfolios because these are busy doctors, medical professionals. And it's our job to make sure they're taken care of without losing their time, getting in the trenches, and we take care of things for the long term for them. Amina, the same thing. Another doctor, infectious disease in New York, young, wanted to supplement her income and not retire. She loves being a doctor, and we wanted to do that. So she bought 3 properties, went on to another 2 properties, and she's almost $6,000 a month. I'd love to see where that's going to be in another 5 to 10 years, and almost $1 million in equity. I think she's going to be in a great position. So why should you join our investor community? If you're not already getting our twice a week email updates with market news, video updates on hot properties, I'd highly encourage. And because that's when you're going to be able to start working with our property counselors, learn our Done For You program, how we've been able to do this over and over and over. The coaching is invaluable, and you're going to be able to get your hand held through the entire process. If you're already a seasoned investor, We'll keep you involved, but also not slow it down. We can speed it up or slow it down, decide on what you want. And again, if you've never worked in a system or you've been involved with real estate and you haven't had someone with this clear of a strategy, build right, finance right, manage right, and bring it all in for you, you might be missing out. You might see that, wow, I really can buy back my time. I really can, get the goals and achievements I'm looking for without a lot of struggle. And that's our main thing following this. So the coaching program continues. Again, I know Allison has people come back to her 7, 8 years later and buy more properties. Because they're so happy and so deep into the equity position, they leverage off those properties and buy more, something that we've seen for a lot of our clients. And that coaching is ongoing. Again, we have clients still working with our main property counselors for a decade now. We want to support you through the lifetime of that. If you decide not to sell, we're here to manage it. If you decide to sell, we can help you with that if you choose, but we'd love to see you grow that portfolio. Now, one more announcement. If you are not busy at the end of July, we'd love for you to come to our next bus tour. That's going to be in the end of July. Jaden, if you could put the dates in the chat box, that'd be great. This is a great way. A day in the field is worth 30 days in the classroom, guys. And this is where I learned and got into the trenches and felt the most comfortable with real estate. You can see the team, see the projects, get a feel for the areas. Great way to learn. Have a great time. We really enjoy this day, and we'd love to have you join us. So again, next steps, book your one-on-one call with your property counselor. There's no obligation. I wish I had had a property counselor 26 years ago. I would have been a lot further down the road with a lot less headaches. So do that. Enjoy your passive income, active freedom. Read the book, get a copy of it, and I want to take a couple of questions. All right, Allison, we got any questions?
Yes, Jim, we did have a couple of questions from Sid. Sid asked about whether or not we should do this in an LLC. And his was a 3-part question.
Sure.
Whether or not you should invest in an LLC. And then he also asked about the landlord laws in Florida.
Okay.
And he also asked about property taxes in Florida. So those 3 things were from Sid.
Excellent. Okay. Great question, Sid. So first, LLC. The way that I've always done it, the way that my partner's always done it, the way that our most successful investors have always done it for at least a high majority, I will always qualify for a loan in my name or in my wife's name. And then after the closing, I will deed it into an LLC for estate planning purposes and asset protection. I never qualify for a loan with an LLC because the banks or the mortgage companies charge a much higher rate. And so it sounds a little confusing up front. And of course, you always want to talk to an accountant attorney. We have a great webinar from my attorney talking about this that any of our property counselors can send you. But again, what we do or what I do or I've always done is I buy a property in my name, qualify in my name, because that's what the banks like to see, get the best rate. And right after closing, I deed that in to an LLC, and that's for estate planning purposes and tax planning. So that's what I do, always do it that way. Next question was landlord laws. I came from California for my first venture. I grew up in the Northeast, went to California. The landlord laws are very important. And again, we don't like to evict, and we rarely have to evict. But you want to know what the eviction laws are, because believe me, tenants will know what they are. And so, for example, in California, it could take 10 months, 16 months to evict. That's a lot of mortgage payments and issues that could be happening to your property without you receiving money. In Florida, it's about 40 days and a few $100s to go through the full eviction process. And what I found compared to where I was in California, when tenants know that, they stay on top of their rents better. And if they can't pay, they usually try to negotiate out or they vacate the property. So I am very happy with the landlord laws here. And the landlord laws are a big deciding factor as we're taking our company more a nationwide approach. There are certain states we won't go into because we cannot put ourselves or our investors at risk. Florida, one of the best landlord states in the nation. And Allison, what was the last question?
Yeah, great thought, Jim. It was about taxes, Florida state, the taxes here in Florida.
Mm-hmm.
Yeah.
Okay, so property taxes. Again, if you're
Yeah.
coming from Texas, you're going to be quite pleased. You know, I love Texas. We're doing some building in Texas. Actually, the taxes are very high, high property taxes. And remember, one of the important things about property taxes in Florida is it's assessed county by county, and there's some different assessments that go into it that could make them higher or lower. So, for example, where I'm sitting, you know, near Jacksonville, Florida, going down to Miami, the taxes in Miami, Florida are much, much higher than Jacksonville, Florida. So one of the things we try to do with picking those areas is find areas with lower property taxes. Now, what constitutes some of the reasons for lower property taxes? Is hurricane risk. So again, Jacksonville, Florida has always had a lower hurricane risk index to it compared to Miami. That is a very high one. And so that affects how much insurance is actually collected. So the markets that we go into, and you could see them again on those flyers, a lot of you are probably saying, holy cow, that's pretty fair prices for property insurance. I'm sorry, for property taxes. And that's the type of areas we try to stick to. Another thing that raises taxes is you know, waterfront or close to the water. So if you're within a half mile of large bodies of water, your property tax are going to be higher. Again, I live about 5 seconds off the beach on a little barrier island, so my property taxes are going to be a little higher than probably my investment properties a few miles inland. But that's something you have to look for as well.
Great, that's super, Jim. Thanks for answering those 3 questions for Sid. We have another question from Rick Jimenez. He's asking about non-recourse loans and whether or not we can do these properties in an IRA.
Yes. So we do have non-recourse loans. You'll want to talk to your property counselor about which lender we're working with currently with the best rates. But about 40 to 50% down would be needed out of your IRA, and you can go non-recourse. We also have loans that are not are 3.75, but probably about 1.5% higher for what's called DSCR. And DSCR just means you can't necessarily go full doc. You have too many properties already. You're an international investor. We've got great loan programs for that as well.
Super, thanks, Jim. And I think we had one other person who requested the LLC video that you did with Amy Vo, and I've got his email. So that was from Rajesh, and I will get that out to him as well. And
Yeah.
I believe, unless we have any more questions, Sid also asked this question. I'm sorry I missed it. He asked about appraisal values and built-in equity.
Okay. Well, again, working closely with this bank, they have their own appraisal systems, and every property we do has to have an independent appraisal on it from them. And so we aim to, we cannot sell a property unless it appraises. So that's why we try to be pretty on top of our pricing. Sometimes we can have built-in equity on our properties. Other times it's at market value. Again, our goal is to get you in the new construction, solid areas with cash flow off the bat. Sometimes there could be equity per the appraisal, other times not, but the properties do hit appraisal values.
Fantastic. Thank you, Jim. We did have one other listener who requested more information by email, and I have made a note of his email from the chat, so we'll make sure to get him followed up as well. And I believe that is everything I'm seeing in the chat box and the Q&A, unless I missed anything.
I had a question come in before. I had a question come in before about best areas. So we build all over Florida, as you saw. I thought I made that comment before, but our top pick for this year is where Allison actually lives, the Ocala region. So Inverness, Citrus Springs, Ocala, it has the best pricing, best cash flow, most growth, where we're building the most right now. So when people say, I love all our markets, they all have those fundamentals, but what has been your number one pick? It's been the Ocala market.
Thank goodness we're building more houses there.
We need it. We need it. Well, good, guys. Again, what I would say is, and then there's another question on house hacking.
Yeah.
If any of you are trying to house hack, live in one side and rent the other, it is a different loan program. We do have a lender that specializes in FHA and VA that helps you get in low down to do an actual house hack with the best results. And we can buy that rate down for you as well. Not as low as our other program, but we can get you a great start. So again, talk to your counselors about that. They'll have it.
Jim, I don't know if we have time, but we have one more
Yeah,
question if you want to address it.
sure.
Sid has asked about if we could please highlight our strength in property management in terms of cost and ensuring that cash flow is not erratic due to expense overruns and things such as that.
Okay, one of the best things that we've done, Sid, is as we've grown, we actually fired a number of landlords. This was probably about 3 years ago. Building a property management company like my partner and his father did, you're taking on a lot of business and properties that are not yours and you don't control. And we had landlords that were buying older properties that needed work and they were really tough to manage. And you get in a tough situation to be between a tenant and a landlord who won't fix something. And it's a really hard spot for a property manager. So we decided to take a pretty big leap of faith and we fired hundreds of properties that were like that. And we really only now focus on new construction. That is our main growth pattern. And by going into new construction in better properties, better areas, we're able to offer better services and be able to not have those higher costs. So again, with us giving away that 8% management fee for the first 2 years, our goal is to prove to ourselves that you want to work with us long term, and then you work with us long term. And I think we have probably about a 95% stay rate after those first 2 free years. And one of the best things that we can do to keep costs down for you is screening and longevity. This is so important. When we have better properties in better areas, again, no one's really building what we build for the most part, especially the duplex and quads, we can get tenants to stay longer. And if we screen them well up front, and again, the average client on my older properties used to stay about 13 months, now it's 3 years. If we screen well up front and we get them to stay longer those first few years, that's one of the most important things we can do to get the best results for your investment. So that's what we really focus on is the systems for that, sticking with better properties, screening well, and providing a product that makes them want to stay long-term.
Awesome.
Good.
I think that's it, Jim, and you landed
Good.
right on the money there at 8
Yeah, we're right at 8
so
o'clock.
good
Who would have
job.
thought? Got lucky tonight. So all I would say, guys, is I know this can be like drinking out of an open fire hydrant. I remember being in that first class, 27 years ago, holy moly now, in Phoenix, Arizona. But it is doable. There are people that I can help guide you, especially way better access now, like with our team that I didn't have 27 years ago. And don't let something that seems overwhelming and confuse you stop you. Like I love the questions on LLCs and such. I got so wrapped up in this and found that it was so easy to understand and actually implement once I had been run through it a few times. I just encourage you, whether it's an LLC or understanding how a loan works, work with someone like Allison, with a property counselor, someone who has been there, done that, whether it's our team or someone else. Don't let that lack of complete visibility and understanding stop you from moving forward. Because I promise you will learn these. It will start to make sense. It will become second nature. And there is no more proven system than buying a piece of good real estate, holding it long term for wealth and cash flow. There's just not, and we want to provide that for you. So again, we'd be honored to work with us. Not any charge for the book. It sells for $22.95 at Barnes and Nobles. But again, if you want a good read with lots of case studies and fundamentals, that can help really be a guiding light. So make sure, again, you reach out to Jaden at 18 Summers or leave something in the chat box. We will send you a free copy so you can read through it. And then again, I highly encourage you to book a call with one of our property counselors, see where you're at, see what your financial capabilities are. A lot of people come through this refreshed, renewed, and excited. So we'd love to do that for you. Allison, anything else to close us out?
Yeah, I appreciate it, Jim. Great job as always. We appreciate all the people that joined us tonight and for the wonderful questions. And Jen, Jim, Paz, myself are all here to help. So please don't hold back. Let us know what we can do for you, okay?
Absolutely. All right, guys, well, have a great evening. Have a great weekend. We're here for you. We have great things on the horizon. You start to see we had a record-breaking sales 2 weeks, the last 2 weeks. So we see the market coming alive again. We'd love to help you out. So please be in touch. Let us know if we can help you, and I wish you the best. Have a good night, guys. Take care.